And welcome in to another show on America's Retirement Headquarters. I'm Nolan Baker. I am joined today with Victoria Wilson. She is from our Ann Arbor office. Victoria, it's great to have you here.
Yeah, hi. Thank you.
Absolutely. And if you don't know, I'm excited to talk a little bit about today's topic. We're going to be talking about how President Biden could impact your retirement, doing a little 1 year recap into the economy, the markets under President Biden. And for any additional topics that we're talking about, this is part number 3 in our 4-part series. So if you missed the first 2 or you want to catch the last of the series, just go over to our YouTube channel and type in America's Retirement Headquarters and you can see these. Today's topic is we're going to be talking about how to implement a written retirement income plan, reliable versus variable income. And I know, Victoria, that one of the professional designations that you have is a chartered retirement planning counselor. And I thought it would be very helpful to have you on today's show because when we're talking about written retirement income plan, reliable versus variable income, this is a topic that impacts so many people that are close to or in retirement time. But before we dive into it, of course, here's our disclosures and contact information. So I would encourage you, if you'd like to read over the entire disclosure and contact information, just take a moment and pause the video and feel free to write down our contact information or any other information in our disclosures. But let's jump right into it. When we were talking about this earlier, if you go back into the good old days, and I'm talking maybe our grandparents' generations, usually what happened is you go work for a company for your entire lifetime, and then you had a steady stream of income and a pension for the rest of your lifetime. Today, that has kind of flipped upside down where that foundation of pension and Social Security isn't quite the same. But let's first of all, Victoria, why don't you describe a little bit about some of the differences of what I would consider or we would consider reliable versus variable income sources?
So reliable for most of the people is the income you can count on and you know that it's going to be there every month. And for majority of people, that's a Social Security. For some lucky ones, there is still pensions. And also, then you have to supply it by something that you can buy yourself, like annuities, or you can also rely on a dividend income or interest income from your portfolio.
And then on the flip end of the scale, I think, what we see nowadays is most people have variable income. So what would we put in the category of variable income?
Well, it's a stock market and the volatility. You can rely on it. You don't know when it's going to be up and down or if there's going to be any gains for you to take out and live on.
Yeah, and I think the good news is for those of you watching today, this is such a crucial time to be taking a look at reliable versus variable income because the stock market has been so cooperative. And it's not to say that the market's going to crash tomorrow, but again, anytime you take a look at it, if you think of investing, you buy low, you sell high, the market is at or close to an all-time record high. I've also got some other good news, and the other good news is what has recently come out on Social Security. So for those of you who haven't listened or saw the news about that, what's going on in the Social Security world?
While the Social Security receivers got about almost 6% increase this year based on a COLA adjustment or cost of living adjustment, which is measured by Consumers Price Index, and that almost 70 million people got that or will see that nice raise on their January paycheck.
Yeah, so January is right around the corner for most people watching the show today. And if you haven't known, you are getting a pay increase on your Social Security. And we want to look at trying to get a pay increase on every possible dollar. But, part of the question that I would also have to ask is, we've seen the news, right? This is the news that came out. But there was news not that long ago about Social Security that was talking about, what the state of the Social Security office is. And so you have to wonder, can the government sustain their long-term promises to retirees?
Well, we don't know, but they just came out to say that the Social Security fund will be gone about 12 years, so about 1 year sooner than previously expected. So we'll
And
see.
now we have the greatest increase in decades on top of that. So you got to wonder what the strain of that's going to place on the government. And I would say, I love this country. I served in the United States Marine Corps. I still think this is the greatest country ever. But the reality is our country faces major challenges. So the takeaway is don't rely upon the government to take advantage, and don't rely on the government to give you all of your income or a majority of income. You have to be financially a good steward of your money and make some decisions that are decisions that you have control of. One of the things that we oftentimes talk to folks about is taking a look at their different sources of income. So when you look at their income, we want to take a look at what the difference is between their reliable income sources and what percentage is covered.
Yeah.
And
So,
go right ahead.
well, for majority people, it's a Social Security, and since that's like the biggest reliable income, people should really pay attention to when and how much we'll be getting and plan for it, or when is the best time to start the Social Security if you haven't already.
Yeah, and one of the scary statistics that's out there that I took a look at is roughly 70% of people that are applying for Social Security benefits as of last year applied to take benefits before their full retirement age, meaning that they accepted to have a lifetime reduction of the income that they were entitled to because they wanted to draw benefits early. And I know that's one of the areas that you can help with creating a written retirement income plan is Social Security. Another area that we had talked about in a previous segment is doing an analysis on your investments. And one of the things that I know that we do here at America's Retirement Headquarters, and of course it's something I or Victoria can help you with, is doing an analysis on the yield of your investments.
Yeah, so people who choose to use the yield as a reliable income should really pay attention how much is that yield, not the total return, but actual yield. And if the yield is doubled, how much more income would that produce?
Yeah, so you could kind of break it down into growth plus income minus fees and expenses would equal what the total return is. So the average investor will typically only look at the total return, the bottom line. And there's nothing wrong with looking at the bottom line, but as you're pointing out, what you want to do is you want to break it down into looking at growth plus income minus fees and expenses. And there's two controllable items out of that. Your income, which is the amount of money that you get from dividends and interest, and your fees and expenses. And growth is the variable that we don't know what the market's going to do. So by being able to increase your income, in many cases, sometimes what you can do is make sure that you start off the year going to the positive with your investments. Too many times I'll meet with investors, and if you take their yield minus the fees and expenses, come January 1st, they actually wake up in the red, hoping that the market grows enough to offset all of the fees and expenses that they're paying, where by changing that scenario can make it a big difference for you too. We talked earlier about some families still have pensions. So what are the type of decisions that people need to make if they're eligible for a pension?
So usually it's a lump sum or some kind of life payout option, either single life or survivor, that some of it or all of it will go to your spouse. But it's important to calculate what's worthwhile for you and what kind of payout rates there are. Maybe we've had cases that the lump sum was a better option, but it depends on a client.
Yeah, it's different per your family, and it's also different per company, and it's different per where rates are at and what the offers are.
Yep.
And everybody's situation is a little bit unique. So, what the guy up the road or what your friend in the lunchroom said is the best option on your pension may not necessarily be true. And you have to think about these are irrevocable, unchangeable decisions. You really get one shot at getting it right.
Yes.
And, retirement doesn't allow the luxury of time to make up for mistakes. So these are areas where you really want to run the math. With the market at record high, it may also be important to take a look at insuring more of your income with insurance products.
Yeah, market is not going to be high forever.
Yeah, the
It's
markets
come down
go up
eventually.
and they do. They come down.
Yeah.
So while things are going good, if you want a little bit peace of mind at night and be able to put your head on your pillow, you may want to be able to look for ways to get more predictable income. So the final thought on this topic is I would say you also can break down what percentage of your income is covering your life's needs versus your wants.
Yeah, so usually people needs are you need that to survive as a housing expenses and living expenses. Those should be covered on from reliable income because you want to make sure that you have enough money to put a food on the table and pay utilities. Then there are wants or might or would like to have that you would love to have them, but it's not a necessity. So those you maybe better choice to combine it with unreliable income or some reliable, depending how important that is to a person.
Absolutely correct. So that's what it's good to take a look at. And again, don't wait and ponder. Be prepared and take action. Hopefully today's show gave you a couple of tips. Here's some specific steps that we would encourage you to take after today's show is consider shifting more money to reliable income sources, at least what Victoria said, to make sure that you're covering the needs that you have in life. Don't leave that money up to chance. Consider creating buckets of money designed to give you a pay raise in the future. And don't make decisions like Social Security benefits running out to make a decision to draw benefits early to take a lifetime penalty. I'd also encourage you to make sure that you pay down and eliminate personal debt. So some of the tools and resources you've had an opportunity to see, what our firm has to offer for folks. But maybe, Victoria, if you want to talk a little bit about some of the tools and resources that we make available, that'd be great for everybody listening today.
So we use Riskalyze, which kind of does a portfolio analysis and finds where there is maybe too much risk and not enough return for that such a risk, and maybe reduce return since we are in a huge market volatility and it's going to come down. Then we also do written retirement income plan, which we use Right Capital for it to kind of look at the whole picture. And very important that we use is Social Security optimization reports, since Social Security is the biggest asset of a majority of people in the retirement. So we really want to make sure that it's that you choose to start it at the best time for you. For some people, it's wait till 70, but we saw cases that it's better to sell at the full retirement age. But it depends.
Absolutely. And we've got a lot of great tools and resources. We'd love to talk to you about getting a written retirement income plan. You might have a financial plan. Maybe you had a plan that was put in place a couple of years ago. Maybe you had a plan that was put in place 10 years ago. And I'm not talking necessarily about a financial plan. Today's show, we're talking about helping you get a written retirement income plan. And that's exactly what our office here in Ohio and Victoria's office in Michigan can help you with. So let's talk, schedule a time. Let's have a strategy session. You can see on the screen, you've got our contact information here in Ohio and also our contact information up in Michigan. So today's topic, we're talking about written retirement income plan, the importance of understanding reliable versus variable income. This is a third part in our four-part series. If you missed the first two or want to catch the next series, just cruise on over to our YouTube channel at America's Retirement Headquarters on YouTube, and we'd be happy to give you those other videos and get you up to speed with 1 year into President Biden's and how that might impact your retirement. Victoria, I appreciate you coming on the show today.
Yep, great to be here. Thank you.
Good having you, and we look forward to seeing everybody soon.